What's up, guys? It's May 20th, 2025. Had an interesting day in the markets. The majority of the day was trading range behavior. Then we had a bear breakout that ended up reversing. So I think it was a hard day. Took a couple trades and then I stopped trading right around here. I got stopped out on this bar or that bar. It might have been this bar. I was trading NQ. It might have been this bar because it came close by. Ooh, okay, here we are. Daily chart, 15-minute chart. 15-minute chart looks sideways as heck. So daily chart, we're 3 legs higher. Leg 1, pull back. Leg 2, pull back. Leg 3. Leg 1, pull back. Leg 2, pull back. Leg 3. And now we've had that first opposite bar. We haven't had an opposite bar on the daily chart since the 9th. And I want to give a quick shout out to all the subscribers and new members. I appreciate you guys joining. The videos I'm working on right now are breakouts, and it's going to talk about just what it takes to have a good breakout, what causes breakout, how traders get trapped. That's the first part of the market cycle, so we're going to go down the market cycle in-depth videos for the members. And to all the subscribers, I appreciate you guys. Thank you for always tuning in and hitting that subscribe button. So here is the daily chart. Here's the 15-minute. Again, we're 3 legs higher. And I'm resetting the leg count with this breakout here. There's a gap from here to here. Trapping bears, gaps happen at resistance swing points, so swing point could be support or resistance. In this case, it was resistance. Breakout, leg 1, pull back, leg 2, pull back, and now we're going sideways into that leg 3. This was the leg 3. Leg 1, pull back, leg 2, pull back, leg 3, sideways behavior. The range is shrinking, so we're starting to go more sideways than trending. Keep that in mind. We can see that today on the 5-minute chart. Well, we can see on all the time frames. Here's the 15-minute chart. Very hard. Look at the first 4 bars. Lots of tails, lots of overlap. It's sideways behavior. Bulls go for a breakout. They barely close the gap, and then it reverses, and bears get 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. Right into support, and that's a 3-legged rally. You could count leg 1, pull back, leg 2. You could count leg 1, pull back, leg 2, pull back, leg 3. Back into resistance, and then bears get a breakout. Sells off, leg 1, pull back, leg 2, pull back, leg 3. The leg 3 is hidden in this tail right here. And then what happens? Trading range behavior is snapped right back to the middle of the trading range. The open is generally a target on trading range days. So if you see the open right around here, you can see how it was a magnet all day. And even when we trended away from it, it snapped right back. So just keep that in mind. Trading range days, the opens are magnets. Yeah. Gap down. Bar 1 is a bull bar. Trading range behavior. We're above the higher time frame EMA. So that means I have a bullish bias, but when both EMAs go parallel, it's trading range behavior. And you can see how this is more flat than down. Kind of comes up, but it's generally just more flat. So gap down, bar 1, trading range behavior. Bar 2 sells off and then rallies. So that means that's also trading range behavior because it sells off and has a rally, 2-sided trading. And now we have a trend bar, bar 3. It's a bad trend bar. It's not closing on its low. There's bulls buying the low here. And then we see bar 4, a big bear bar closing on its low. But it's closing on its low. It's closing below the EMA, but it has a tail. So bulls could be buying lows and bears were taking profits. So bears were not inclined to hold at new lows. And then we see bar 5, 2-bar reversal, gets no follow through, very hard open. Bar 6 sells off, closing right around its midpoint, has more tail. So far we've had it up, down, so big, and we had a down move right there. Trading range behavior, bears are selling highs, bulls are selling lows. There's a triangle here. When a triangle breaks out, 50% of the time it can try the other way. And that's that 50% right here, breakout, and then it goes the other way. Bar 9, bull bar closing on its high. Bar 10, trading range behavior. Bar 11, rallies into the EMA and then sells off. Bar 12 has more tail. Again, trading range behavior. So you can see all this overlap. There's no gaps. No traders are getting trapped. Bears that get short here are going to short more here and get out. Bulls that buy here can buy more and get out for a small profit. Bar 13, inside bar. Coming to that triangle, prices coiling up. Then it gets a bullish breakout. 14, 15, follow through, trapping bears. This is generally what I look for to trade. 3 bars in the gap, breaking out. Look at the breakout. Look at the bull legs. Leg 1, pull back. Leg 2, pull back. Leg 3, pull back. Leg 4. Or you could count it leg 1, pull back. Leg 2, pull back. Leg 3. So this breakout's taking place in a leg 3. There's a gap, but in trading ranges, gaps get closed, and we can see that gap gets closed right here. 16, bad follow through. 17, bear bar closing on slow. This looks like a setup where I would say, oh, first reversals fail, and maybe I might. I actually did get stopped out here. I think I got stopped out on 13. Then it rallied. Yeah, you know, all setups fail sometimes. Just something you have to get used to. There's context clues to say why this would fail, and I think the context clues are trading range behavior. We're in our trading range yesterday. We have lots of overlap. Breakouts generally fail in trading ranges, and gaps get closed. So all these gaps are getting closed. This is the first real gap, and that gets closed on 18. 17, 18, 19. Now we have another gap, and that gets closed within 3 bars. 20, 21, 22. 22 is testing the low of 17, and it sells off for 2 to 3 legs down. Leg 1, pull back, leg 2, pull back, leg 3. Here's a 2-legged rally by the bulls, by the way. I just noticed that. 3 pushes if you want to count the tails on 29. So 22 is testing the low right here. It's the breakout point for 18, and you can see there were more sellers at trading range highs than buyers. 23, bear bar closing on slow, but bulls bought that before bears did, so they were able to make close to 1R. 25, bad follow through for the bulls, good for the bears. 26, has more tail, but it's a bear body. And then 27, bear bar closing on slow. Bear bar closing on slow, but it's not closing bar past anything. So if this is a breakout bar, what's it breaking out of? It's really only breaking out of this small range right around here. Then we see 28, bull bar closing around its high. Again, we're in a bull regime. We're above the CMA, and they get their second leg on 30. Leg 1, pull back, leg 2. Bar 30 is testing the breakout point again. Breakout points get tested a lot in trading range days, so keep that in mind. 30, where are we? 30, yeah, so testing the breakout point here. Sells off for a few legs lower. See these tails? That could be 3 pushes down. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, higher low, and it rallies. 35 doesn't make a new low. It actually, this tail is not good for the bears because it lets you know bulls were trying to buy the high of 34. So when they buy that high here and they're underwater, they're going to buy more lower and get out at break even. Instead of getting out break even, they actually got a rally. So bears shorted 35, they get trapped on this tail, it reverses. Bears are buying back shorts. Bulls that got trapped here on 35's high, then buy lower, and now they're going to start the rally. So bears are forced to buy back shorts while bulls are buying trading range lows. 36 has more tail, but bull body at trading range lows after bears have had several legs down. 37 was that bull bar rallies into the EMA but sells off. So there's some more sellers right around the breakout below 31. But then we have 38, breakout bar, and a gap. This gap was short-lived. It does get closed right here, but it's open, and it trapped enough bears to get a second leg up. 39, followed through for 38. It's bull bar closing on its high, but it does have some tail. 40, bar 40. We have 4 bull bars. This could be the first reversal, and it worked for a good fade. Bulls that bought this made 1R, 41 before bears made 1R. So this was actually a first reversal. They won bull by 2. Second leg trap right into resistance. 45 is testing the 16 low. 46, bear bar closing on slow. 47, bear bar closing on slow. Both have tails, and then 48 breaks the trend line here. So we're going to that second leg for the bears. 49 sells off, and then we have sideways behavior. This becomes a double top bear flag. What is a double top? Well, it's trapping bulls. Bulls that buy here are going to buy more lower, and then they're going to get out break even. Bears see this, that get trapped here, they're going to short higher, and now they're going to hold to their first entry. When they get that, they start to see a breakout and they press their positions. This causes the breakout. Bulls are now trapped. All day they've been buying range lows. They're forced to sell out of longs, and Look where the gap lines up, right around support. So again, gaps happen around support and resistance. Gap here, trapping bulls. Instead of bulls trying to cover themselves, they're forced to sell out at a big bear bar. Second leg right here, pull back, and then leg 1, pull back leg 2, pull back leg 3, bar 60, bear bar closing on slow, showing off to get a second leg down. 50% levels being tested with 61 and 62. 63 becomes a 2-bar reversal for these 2 bars, and it gets follow through. This leg becomes climactic, 64 through 68. It's a type of a triangle that breaks out. Same situation here, price action is fractal. A breakout of a triangle, 50% of the time it will reverse. Breakout of a triangle, 50% of the time it will reverse. So trading range behavior, this breakout reversed. This breakout of this triangle reversed. What leg is 67? Move this chart up a little bit. Leg 1, pull back, leg 2, pull back, leg 3. Third leg down is better fades. Trading range behavior. Bears start to take profits, and then bulls see bar 68. 68 become a reversal is a form of a breakout. It's, in this case, bears are getting trapped, so they're going to buy back shorts. Bears are looking for a second leg down this entire move. Instead, bulls buy the lows, hoping for a test of the open of the day, and they get that with bar 78. We have 69 closing on its high. 70 is a bull bar but has more tails, so trading range behavior. Starting to pull back. The market's channeling. You can see that this is one big bar, and there's a pullback on 69. So now we're in a bull channel into the EMA. The bull channel breaks out 73, gets a gap with 74. 75 closes that gap. Bad follow through 76 for the bears and the bulls. And then we see bears try and sell off on the tail of 77, but it rallies, trapping them. They buy back shorts, and they get one more leg up. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. Again, testing the breakout point 57, testing this triangle, breaks out, reversed. It's a good stat to remember on trading range days. Almost all days when triangles break out, 50% of the time they can reverse. Triangle, broke out, reversed. A wedge bottom is a form of a triangle, but we'll just keep the conventional. Triangle, broke out, reversed. Triangle, broke out, reversed. So keep that in mind. Open in the day is a target. What trades did I take today? Well, I was scalping a little bit. I got stopped out there. I did take a trade. I know I got a long that worked. It might have been right here. Yeah, that was the long that worked. Filled on 12, out on 14. Then I tried to take this. I got stopped out there. And then it went to the target. Reversed. I did catch a short. I was a little bit late to the party with the short on NQ. I caught it a little bit, like on bar 30 was still rut trading around here. Bar 30. Yeah, you see what I mean? Bar 30 still tested the low right here, so I got filled and out. So it wasn't the worst day. If you're looking for measured moves, it's hard to look for measured move on trading range days. Failed. But what about a breakout of this entire gap? 1-to-1 was met. That's nice. That's nice for the bears. They hit their target. Bulls were able to close the gap, and then the bears got a lower high, and they got 1-to-1 when they broke out with the trading range from the open. 59 breaking out of the trading range, and 1R is met very quickly, and then it fades back to the open. It's a tough day. Kept the trading slow today. Gaps are closing, so that's a breakout trader's worst day. Hope you guys did good. If you learned something, share the show. Don't be a hoe, and I'll talk to you guys tomorrow. It's almost the end of the month. One more week to go. I think on Monday's a short day anyway. So you guys have a good one. I will talk to you guys later. If you learned something, hit the subscribe button. If you want to learn more, join the membership and talk to us in Discord. Discord's fun. I like talking to you guys. Have a good one, everyone. Thank you for your time. Bye.